Hi, this is Matthew, and today I'm back to talk about stocks. And today we're going to talk about mutual funds. What are mutual funds? I got this definition from Google, so you can Google it. A mutual fund is a managed portfolio of investments that investors can purchase shares of. Mutual fund managers pools money from many investors and invest the money in securities such as stocks, bonds, and short term debt. You will now say, what is a portfolio? People may ask, what is a portfolio? A portfolio are the combined holdings of the mutual funds. Why are we talking about mutual funds today? Mutual funds have been seen to be the safest. Have been seen to be the safest when you are investing, or have been seen to be the safest investment that you can make in the short term. It carries risk, but it's not like buying a stock, individual stocks of companies. Mutual, mutual funds, because it's a collection of many stocks or many securities or many investments, tend to be safe because let's say there are 20 stocks on a mutual fund. If 18 are not performing and two are performing, that two can cover for the losses of the 18 or can help to balance the portfolio, thereby keeping the investment stable. This is why mutual funds are a bit safer than buying stocks. So, what I tell beginners to do is when you want to start investing, to know the foundation, the nitty gritty, the building blocks of investing. Try investing in mutual funds first. The mutual fund investment will make you understand what is going on because many of them pay dividends, many of them increase, like they appreciate normally. So it's something to try when you start investing. So when you now understand how this work, you can use your broker site or check your brokers for other stocks, individual stocks. That's what I think. And just to put this out there, this is not an investment advice because investment, whether we like it or not, is risky and you can get less than what you put into the investment. Experts say for you to for you to maximize the best out of your investment, you have to do it for 10 years. But a lot of um, but times have shown that 5 years, less than 5 years, you can get something out depending on what you are investing in. But like I tell people who want to really go into this, who have made up their mind to go into this, make sure when you are investing, you do it with your free money, the money that you have, that is not, it's not for rent, it's not for bills, it's not for anything. But the money that you have been planning to use to go and just spend on frivolities, you can just put it towards investment. But like I said, this is not an investment advice. Now the common mutual funds and the ones that have always given returns, come rain, come sunshine, they don't have holidays in giving returns. The one that is out there that everybody is doing, that everybody knows that this one is sure banker. We're talking about S&P 500. When we're talking about S&P 500, we're not just talking about just one stock. We're talking about these funds tracking 500 companies in the US. It's tracking the 500 companies in the US in the S&P 500. That's this fund track the 500 company in the S&P 500. So I will mention the funds now. There's Vanguard S&P 500. If you are in the US, the Vanguard S&P 500, if you are in the US, the sticker symbol is VU. If you are in EU, it is VU. If you are in the US, the ticker symbol is VU, VOO. If you are in Europe, it is VUSA, VUSA. Another one is VUAG, VUAG. These are Vanguard S&P 500 that you can invest in if you want to invest. There's another group, they call them SPDR. They track SPDR, also track the S&P 500. SPDR also tracks the S&P 500, and the popular ticker symbol are SPY, SPY, also SPY 5, SPY 5. Another mutual fund that a lot of people invest in is the FTSE 100, the England, the London Stock Exchange. FTSE 100 this tracks the 100 companies, first top 100 companies in the United Kingdom. And the mutual funds are iShare Core FTSE 100. The mutual fund is iShare Core FTSE 100. Ticker symbol is CUKX. And also the Vanguard FTSE 100. Vanguard FTSE 100, ticker symbol VUKG. Another one is VUKE. Another mutual fund that a lot of people invest in, but this one is more risky, is the NASDAQ 100. The NASDAQ 100. The NASDAQ 100 is the big 100 tech in the US. So this one is more risky. So yeah, but it gives a lot of returns, but it's more riskier than the other ones. And the mutual funds that in the NASDAQ 100 is the Invesco EQQQ NASDAQ 100, ticker symbol EQQQ. Another ticker symbol is EQGB. And in the US, it goes a ticker symbol QQQM. Another mutual fund, iShare NASDAQ 100. This one got a ticker symbol CNXT. Another ticker symbol is SXRV. Another ticker symbol is CNDX. We're talking about the iShare NASDAQ 100. Look into this. Like I said, you do your due diligence before you invest in any stocks. Don't just rush and don't just rush and jump in because someone is saying these are stocks, but they got a track record, a good track record. That's why we talk about them. And like I said, it's not an investment advice, but just check it because people have been making money from investing in these mutual funds. It's funny how people's fortunes have grown over the years for just doing simple things. So look into it and see. You might be very lucky and things just go your way in a very short time. Yeah. Thanks for listening.